ETFs are, in my opinion, the best way for the average person to invest their money, and there's no wonder that its popularity has grown by so much ever since its inception. As of 2022, ETFs listed in the US alone has hit an asset under management of more than $6 trillion. But how can you invest in them? And with over 3,200 different ETFs to choose from, which one is right for you? First off, what is an ETF and how does it differ from investing in stocks? So think of an ETF like a basket of investments that can hold different assets like stocks, bonds, and commodities, or a mixture of them. If you hear this and you're thinking, hey, isn't that the same as unit trust or ASB? Well, you're right, because they are basically the same thing. The main difference between an ETF and a unit trust is that ETFs are exchange traded, meaning you can buy and sell it off the stock market. That's why its name is ETF. The ET stands for exchange traded. But even though it trades on the same stock market as any other stock out there, they're obviously not the same thing. So if you bought a stock, let's say you bought Tesla, you will only get ownership of Tesla. But if you bought an ETF instead, you will own hundreds, sometimes even thousands of different stocks. So think of it of like, buying a basket where when you buy that basket, you get ownership of many different stocks easily. So let's say if I had 100 ringgit to invest, if I used that 100 ringgit to only buy Tesla, then all 100 ringgit would go to Tesla. But if I used that 100 ringgit to buy an ETF like the S&P 500, then I will own 1 ringgit 73 cents worth of Tesla, but I will also own 499 different companies. So investing into ETFs are more for people who just want to invest their money and they want to take a hands-off approach. If you really believe in a company and you think that it's going to go to the moon, then it's better for you to just invest directly into that stock rather than invest into an ETF. But there are a few reasons why people like investing into ETFs. For one, it's just a lot easier to invest in one ETF compared to 500 different stocks. If you want a diversified investment portfolio, your choices are basically A, to choose 20, 30 different stocks and then invest in them, or B, just invest in one singular ETF. And this becomes even more appealing if you're thinking about it from a perspective of you're going to be investing consistently every single month. Again, if you had a portfolio of stocks, you would have to make 20, 30 different transactions to buy every single month, versus if you invested into ETFs, you just make one transaction. So this is gonna just save you time, but it's also going to save you money because you're going to be making less transactions in total. But the main reason people like investing into ETFs is that it makes investing just so much easier. So let's say if you wanted to invest into individual stocks, you kind of have to do research to know whether it's worth investing in. Has the company been doing well? Is it going to do well in the future? Is the price right now a fair valuation of the company? These are all questions that you're gonna have to answer if you want to invest in stocks. But since your ETF investment is so diversified, it doesn't really matter. You can just buy it anytime you want. They even go through rebalancing periods where they kick out the bad performing stocks and they include the good performing stocks. And this is basically how ETFs can give you good returns over the long term. They can't just invest in the same stocks forever because business cycles change and stuff like that. So basically what's happening is that we're investing more money into the good companies within the ETF and we're investing less money in the bad ones. So ETFs are the perfect way for the average person who just wants to invest their money and they want to take a hands-off passive approach. In 2023, that person was actually me. I adjusted my long-term investing portfolio so that I removed all of my stocks and replaced it with completely ETFs only. If you want to watch the video of why I decided to do this, you can check out this video here. By the way, if you guys want to invest in ETFs, then the first thing that you will need is a brokerage account. I use both Interactive Brokers and M+ Global. In my opinion, they are the two best brokers for Malaysians right now, and I'll leave the link to sign up down in the description below. At the end of this video, I'll also show you guys a step-by-step of how you can buy ETFs from M+ Global. Anyway, let's move on to choosing the right ETFs to own. In the US alone, there are more than 3,200 for you to choose from, but don't worry, most of them are garbage, so we don't really have to consider them. But there are a few different types of ETFs that you at least have to know, so I'll be running through them, explaining what they are, and also giving you guys some examples of ETFs that you can own. So we'll start off with the most popular one, which is the index tracking ETF. So indexes are basically every country has a stock index that represents the entire market, just like how in Malaysia we have the FPM KLCI, which gives a representation of the entire Bursa market. Most countries like us will only have one stock index, but some countries like the US, because they are so developed, they have multiple indexes to track multiple different things. So they have an index that will track large caps, small caps, medium caps, growth stocks, value stocks, and a lot of other things. Initially, indexes were meant to just represent an overall market and they acted as a benchmark for investors. But eventually, these finance bros, they got a good idea and they thought, hey, why don't we create ETFs that basically track these indexes? So to give you guys an example, the S&P 500 is an index that tracks the 500 largest companies in the US, and you can invest in it via an ETF called SPY, which is also the largest ETF in the world with more than $450 billion of assets under management. Another popular one is the Nasdaq 100, which holds 101 non-financial companies listed on the Nasdaq exchange. Funny how the index is called Nasdaq 100, but there are 101 different companies. Anyway, the reason that this one is so popular is because it holds major tech companies, which, if you guys don't know, has performed extremely well over the last 10-15 years. You can invest in this index via an ETF called QQQ, and over the last 5 years, it has returned over 170%, meaning if you invested 5 years ago, you would have nearly tripled your money. The final example that I'll share is another popular one that tracks the FTSE Global All Cap Index. So unlike the first two examples that I gave you guys that were more focused on the US, this one tracks every single company or nearly every single company listed around the world. So you can invest in it via an ETF called VT, which holds 9,687 different stocks. You literally cannot get this much exposure to this many different stocks if we didn't have ETFs. Anyway, moving on to the next type of ETF that you guys can invest in, which are industry-specific ETFs. So let's say, for example, you think next year the healthcare sector will do really well. Instead of investing in an index tracking ETF, you can invest in an ETF that will cover only companies in the healthcare sector. You can even go more specific. If you don't want it to just be tech, and let's say you believe in AI specifically and you think it's going to grow more, you can invest into semiconductor ETFs like SMH or SOX. So you can invest into companies like Nvidia and AMD. So there are even, AI specific ETFs, but I think that they're not so developed yet. So if you want to invest in AI, then the best bet would be into these kind of semiconductor ETFs. And there are many other industries that you can choose from. You can choose from broad industries like energy and healthcare. Or if you want to be more specific, there's even stuff like clean energy or e-commerce and stuff like that. I used to invest in a cybersecurity ETF because I thought, the cybersecurity space is going to do well. But it's so complex and I didn't understand it that I just wouldn't know which stock to invest in. So yeah, I decided to choose, just the entire cybersecurity ETF. So if you guys are bullish on a sector, you think a sector is going to do well, but you don't know which company in particular is going to do well, then investing in these kind of sector-specific ETFs can be a good choice for you. The third and final type of ETF that you guys can invest in are ones that focus on a specific region or even a specific country. So the examples that I gave you guys earlier, all of the ETFs that I was talking about, they are mostly focused on companies in the US, just because the US has done pretty much the best over the last 10 years. But if you guys don't think that the US will perform good over the next few years, they can also invest in other countries or other regions. So a very popular choice and a good example that investors really like to invest in this space are the Emerging Markets ETF or VWO. So this will give you access to, companies from the major powerhouses in the emerging market space like China and India to the smaller countries like Malaysia and Philippines. But to be honest, I don't know why China is still considered an emerging market. I'm pretty sure it has emerged, right? But I don't know, it's still there. So I've actually got quite a bit of money myself into this emerging market ETFs because, like I said, a lot of the other ETFs out there, they are very focused on the US. So I wanted a bit more diversification, I wanted a bit more fun, which is why I put quite a bit of money into this emerging market ETF. Recently, I also invested into an India-specific ETF because I just wanted more exposure there because I just have a gut feeling that India will do well over the next few years. If all of this sounds scary because you're new to this and so many different types you don't understand, don't worry, I've got some handy tips for you. Basically, if you don't think or you don't know about any specific sector or country or region that's going to do well, just focus on the index tracking ETFs. That's completely fine. There is a reason that they are the most popular ETFs out there. And even if you just choose them, it should be good enough for your entire portfolio. I know many people in the FIRE community, the Financial Independence Retire Early community, that invest exclusively in the S&P 500 and the Global All World Index. So, just choosing something like SPY and VT, that should be good enough. That should give you exposure to 9,000, 10,000 different stocks, and is good enough for your long-term portfolio. If you're feeling a bit more adventurous, then you can go for the other ETF examples I was sharing about earlier. I would just recommend not owning too many different ones because it can be a hassle to manage. If you guys want to look at all the different ETFs in the world, you can use this website. It's called etfdb.com, and you can just go wild, look at all the different choices there. There are a lot of different types of ETFs. There are also bond ETFs, there are commodity ETFs that invest in gold. I just didn't really cover them. Pretty soon, we should also see even a Bitcoin ETF. Something to keep in mind is that these ETFs do charge a fee, but one of the benefits of investing in ETFs are that the fees are usually pretty low, and they are a lot lower than unit trusts because they are passively managed. So you can find these fees on most websites. Just look for something they call the expense ratio. The most popular ETFs out there should have an expense ratio lower than 0.2% per year, but some of the more specific ones, like maybe the semiconductor ones, can be a bit higher. Don't worry though, these fees are not something that you have to pay out of pocket. They will just deduct it from your annual returns and you'll be good to go. Now, let me show you guys how you can invest in ETFs. I'll be using M+ Global on my phone. I'll also show it on the screen now. But this is just an example. It should be pretty much the same process whichever broker you're using, including IBKR. So when you open the home screen here, you'll see watch list, all those good stuff, whatever. You can just click search. And then let's say we search for SPY, for S&P 500, and you can see the ETF here. So here you can see the price, volume, all those stuff. But on M+ Global, you can also see the profile, which will basically tell you a lot of information. It can give you like industry, what industries the S&P 500 invested in, mainly technology, healthcare, financials, Regions, you can see mainly it is the United States. If you look at the emerging markets ETF, you will see different countries here. And you can also see the top 10 holdings of this ETF. So the top 10 holdings for S&P 500 is the standard big companies: Microsoft, Apple, Amazon, Nvidia, Google, all those good stuff. Right, so once you're ready, you want to invest in S&P 500, you just hit buy, put your password in, and you can see that, you can just click buy, order type limit. The price is the price that you want to pay. Quantity, you can set it as 1 or however much you want to buy as well. And then you just hit buy. So then you say, oh, I don't have enough money. But yeah, if you had enough money, you could buy this stock. And then once the order gets filled, once the market is open, your order gets filled, you just open trades and you can see your position here. So yeah, that is how you can invest into any ETFs. It's extremely simple. You just need to figure out which ETF you want to buy and then open a broker account and just make the purchase. Like I said, if you guys want to use M+ Global or Interactive Brokers, use my link down below. If you sign up for M+ Global using my link and you deposit 2,000 ringgit, you'll actually get some nice freebies. You'll get a free stock and also some trading vouchers. By the way, just to share, you could also use Stashaway to invest into ETFs. Their flexible portfolio product will let you choose basically which ETF you want to invest in. You can construct your own portfolio and then you can invest and all those good stuff. It is actually quite a bit easier, but in terms of what ETFs you can choose, it will be a lot more limited compared to using a broker. But yeah, if you guys want to check out Stashaway, their flexible portfolio, you can check out our video that we did here. Anyway, I hope you guys find this video helpful. If you haven't already, you should really consider investing into ETFs, especially if you're the type of person, who just wants to invest their money hands off and you don't care about the stock markets. They are easy to invest in, they have low fees, and they can give you pretty good returns. Thanks for watching this video to the end, guys. Give us a huge thumbs up if you enjoyed it and subscribe to our channel if you haven't already. See you guys in the next one. Peace out.